Good afternoon. We're going to get started in just a second here as everybody signs into the Zoom. See lots of people trickling in. All right, I'll just get started. Thank you all for joining Edelman Global Advisory, EGA, for today's discussion on China's new development paradigm and what it means for business. My name is China Haas, Director for China in EGA's DC office, and I'll be moderating today's discussion. Today is the kickoff of what will be a series of discussions on China and related topics, and we already have a few in the pipeline, so please stay tuned. And I'm really thrilled today that we're able to host our first discussion with EGA's strategic partner, Trivium, a boutique China-focused policy research and analysis firm. EGA and Trivium launched our partnership in November to strengthen and expand our respective offerings in China to help companies make better informed decisions and navigate China's evolving political and economic landscape. For today's discussion, we're joined by Deborah Lehr, CEO of Edelman Global Advisory, and Andrew Polk, co-founder of Trivium China. As CEO of EGA, Deborah leads Edelman's global strategic business consulting and public affairs arm. Deborah has a deep background and expertise in China, including building and managing 3 successful consulting firms representing diverse Western and Chinese companies, as well as serving in the US government, where she was the Deputy Assistant US Trade Representative, negotiating China's accession to the WTO, and Director for Asian Affairs at the National Security Council. Andrew co-founded Trivium and heads up the firm's economic research. He also brings China expertise as well as a background in economics and finance. He previously served as China Director at Medley Global Advisors, where he advised asset managers and hedge funds on developments in China's economy and financial markets, and has served as resident China economist at the Conference Board's China Center for Economics and Business, where he conducted economic analysis on the Chinese economy for corporate clients. So turning to today's discussion, China has entered what many analysts and China watchers are calling a new paradigm, a fundamental reset or an inflection point. Xi himself calls it a new era. Last year, Xi declared that China had achieved the goal of becoming a moderately prosperous society by the party's centenary. He's now turning to the next goal of building a great modern socialist country that is strong by mid-century, which is the centenary of the founding of the People's Republic of China. This shift is already being translated into a new policy framework that is having implications for businesses, both foreign and domestic. On the foreign policy front, I would be remiss if I didn't mention Ukraine, which I'm certain is on everybody's minds and could significantly impact Xi's efforts. Xi has established himself at the core of the party leadership and is central to all policymaking. And part of this endeavor has included positioning himself as a global leader on issues like trade and climate change, which are areas that the US has left a vacuum in recent years. But the Ukraine crisis has put China in an awkward position. China is clearly struggling to balance some of its strategic objectives, such as support for a strategic partner, Russia, its foreign policy commitment to sovereignty and non-interference, and maintaining economic ties with the US and EU. And the international community, as well as China's domestic stakeholders, are watching. So today, Deborah and Andrew will share their thoughts on what this new paradigm means for business and what you need to watch going forward. To keep this conversation flowing, it'll be a moderated discussion, so please feel free to drop your questions into the Q&A box throughout the discussion, and I will do my best to get to them. So let's kick it off. Both of you approach China's paradigm shift similarly, but from slightly different angles. Deborah, you call it Xi 3.0, and Andrew, you call it PRC 3.0. So perhaps it would be helpful to start with a lay of the land. Could you both provide a bit of background on how you view this shift, how we got here? What are some of the new goals? What are some of the big picture drivers and motivations for policy and decision making? Deborah, how about you take it away, and then we'll turn to Andrew.
Great, thanks so much, China. And we are delighted to be partnering with Trivium and with Andrew, and so happy to be on this panel on one of our first projects together. So 50 years ago, President Nixon traveled to China to establish relations with Mao Zedong, in large part to serve as a countermeasure to the Soviet Union. At that time, China's economy was about $260 billion. Today, it's now almost 15 billion. Some could argue it's even larger. 15 trillion, and some would argue it's even larger. In 1978, 90% of China survived on less than $2 a day. Today, 99% are above the abject poverty line. There's no question that China's come a really long way. And the United States has benefited from China's economic growth through cheap imports to the US, opportunities for market openings for our firms in China, and China has been an engine of growth for the global economy. So there is a certain irony on this year that's the 50th anniversary that China again is a pivot point, as it appears that Putin is attempting to recreate the geopolitical sphere of the Soviet Union. And as the world's largest or second largest economy, China's decisions today carry significant more impact than they did 50 years ago. But this time so far, China's siding with Russia. As China was saying, China's foreign policy spokesperson blamed the United States for provoking Russia. In the United Nations, China has abstained from a vote in the UN Security Council to condemn Russia's behavior and voted against a resolution for debate about the issue in the Human Rights Council. She has spoken with Putin and called for a negotiated solution. And she and Putin signed contracts for long-term supplies of oil and wheat last month during the Olympics. So what does this mean? I'm sure we'll get into a lot of this in the discussion today, but let me lay out just a few key issues. As Xi enters into his reselection campaign for a third term as president, he was hoping for stability. He's addressed this past year some of the key drags that they were facing from the economy and was hoping to enter this year with strong economic growth. Last year, they had a banner year for exports despite COVID and the lockdowns. They have been handling the real estate crisis and trying to get that under control. They've launched this quarter a fiscal stimulus plan that should start to hit right around the third quarter, maybe coincidentally around November, when Xi stands for his third term. And they've resolved the energy slowdowns, which were really having an impact. Global economic growth looked promising. And China hoped that the US and EU relationships, while maybe not strong, at least were steady. And there were some even bright spots around climate. Russia's invasion is an unexpected shock. It forces China to pick between its longstanding position on national sovereignty and the historical legacies that he's viewed around territorial issues. And the impact of Russia's action, besides, of course, the terrible loss of life and the challenges of the poor Ukrainians, it will be a drag on global economic growth, especially hitting those economies still suffering in this post-COVID world. It will result in higher energy prices and food prices globally, which in turn will have an impact on China's growth. US and likely EU policy will strengthen against China, especially if it continues to support Russia. And it could even result in additional sanctions for China, especially if we see that China is transferring certain types of technology to Russia. So all of this is against a backdrop where President Xi has been trying to position himself as a global leader in the lead up to his reselection. China's National People's Congress starts later this week, and they will lay out the policy agenda for this upcoming year. These outcomes will be an important indicator of the path that China is going to choose, siding with Russia or against. Walking the tightrope for Xi is really a good analogy because in this situation, it's virtually impossible and really a high-rise act. So Andrew, over to you.
Thanks, Deborah, and thank you, China, for the introduction. Let me just say at the outset that we at Trivium are also thrilled to be partnering with everyone at Edelman at EGA and excited about our new strategic partnership and look forward to doing more projects like this and others with you all going forward. I think I'm going to step back a little bit and talk about some more structural things that we see going on. I think Deborah did a really good job of laying out some of the immediate issues that China is facing and Xi Jinping is facing in terms of his leadership and shepherding the Chinese nation, the Chinese economy through what has been an exceedingly turbulent time with COVID and now with the Russia-Ukraine situation and everything else going on in the markets, et cetera. So, I think we'll have plenty of time to really dive into some of the immediate considerations. But I think it's really easy to forget because so much is coming at us so fast in the day-to-day developments. It's easy to forget that really some structural changes are happening in Chinese governments and Chinese governance, and Chinese policymaking. China has alluded to some of them at the beginning of this presentation in her opening, and mentioned that we at Trivium call this PRC 3.0. And I want to explain a little bit about what we mean by that, again, because we think it sets the critical context for all the minute-by-minute, day-to-day decision-making that is going on at the highest levels of the Chinese government. So for us, as China said, this is a shift from basically trying to achieve the goals of governance of the past 30, 40 years of becoming a moderately prosperous society to now becoming a strong, modern socialist country. So we have to remember that she, over the past basically year and a half, has said, we've accomplished the goal that we were trying to accomplish over the past 40 years. And now we have a new goal for the next 50 years. And I think it's incredibly important to keep that in mind, that when your goals change, the tools you use to achieve those goals change, the types of decisions you make to achieve those goals change. So the very fundamental goals of Chinese governments are in flux. And China has pointed out that this is an inflection moment. A lot of people are looking at this as an inflection moment for Chinese policy. We really think that inflection comes down to this idea of PRC 3.0, the third stage of Chinese socialist development. If you look at kind of some of the basic, most fundamental things that have happened over the past few years, we think two stand out. One is last year's resolution on history that took place at the Sixth Plenum, I believe in November last year. The party put forth a resolution on history. This was only the third time that they have done so in the party's history. The first time was in 1945 that set up the Mao era. The second time was in 1981 that really closed the book on the Mao era and opened the door to the Deng Xiaoping era. And now we had one in 2021, which in our view is really meant to kind of close the door on the Deng Xiaoping era, the era of opening reform, and open the door now fully to the new era, the Xi Jinping era. And so you can see how important these resolutions on history are. In fact, that 1981 resolution on history was the one where the party basically said, Mao was 70% right, 30% wrong. Really kind of, put a flag in the ground to say, okay, there were good parts about the Mao years, there were some bad parts, now we're going to move on to something different. The resolution on history, in our view, from last year kind of did the same thing with the reform and opening era. The reform and opening era. It said, basically the reform and opening era did a lot of good. We had a lot of high growth, but there were also bad byproducts of that, one of which was extreme and widespread corruption. So they didn't quite say the 70-30 formulation, but sort of similar. And most important, it meant to be a punctuation point on that era to very clearly open the door to something new. And so what came along with that resolution on history was the party saying, basically the era of high growth at all costs, the reform and opening, all those things we were trying to do, we accomplished what we wanted during that period. Now we're trying to do something new. Another important thing that has happened in the past few years is Xi Jinping also changed the primary contradiction in the party's constitution, which is also only the third primary contradiction that the party has had over the course of its history. So again, when we look at some of these really fundamental governing philosophies that Xi Jinping is putting forward, to us, it just shows how seismic the shift is in terms of trying to achieve new goals. A lot of that might seem really esoteric, but it's incredibly important. And the reason that we think it's so important is we see it already, as I said at the outset, trickling down into new types of decision-making, new types of policy-making, new tools for economic and social management that the party is using because they're trying to achieve new governance goals. We can get into some of those in the discussion in a minute, but I just kind of want to foot stomp this idea that that seismic shift is really what's underpinning some of the minute-to-minute decision-making, as I said at the beginning. Just quickly to tie this off, I think there's a couple of things here where we can really see that policymaking is starting to change. One of the most important things is when you change the goals, you change the tools, you open space for policymaking that wasn't there in the past. So, all the people that who have looked at China for years and years and said, well, China's wanted to do X for 2 decades and they never do. They'll never, put in a property tax, for example. Well, now there's serious momentum behind a property tax because there are new dynamics underpinning economic policymaking decisions. Similarly, the fact that they've tightened policy around real estate. Similarly, the fact that they're going to have a very low growth target this year. They're very much de-emphasizing growth, even though, as Deborah said, Xi Jinping wants stability this year because of the party Congress. They've changed the nature of what stability means. It doesn't just mean high growth. It means financial de-risking and controlling financial risks and other risks to the economy. So I could go on and on this, but let me just stop there and sum up by saying, she's very clearly said we're in a new era. That new era brings with it new governance and development goals, and that is starting to open up different options for the party and the government in terms of the policies it chooses. And the game now, I think, for businesses in China is to understand, okay, where's the new space? What might surprise us in the policy space, and how do we get ahead of that?
Fantastic. Thank you so much. That was a really helpful overview of both the current events as well as the historical landscape that has gotten us here. And I think is a great framer for today's discussion. So Andrew, you kind of mentioned and you touched on a couple sectors that have already kind of felt some of these policy implications of the new shift: real estate, finance, technology. What are some of the other sectors that you expect might be facing some new policy tools or decision making?
Well, one of the most important that I think businesses need to be on the lookout for isn't a sector of the economy per se, but it's an important aspect of the business environment. And so as China's trying to think about how they, what their goals are in terms of growing their country to be stronger, a great modern socialist nation, well, that has huge implications for geopolitics, obviously, which is a big part of what we're talking about. And specifically, they have very rapidly over the past year rolled out an basically anti-sanctions regime to combat the US sanctions capability, right? And it's really kind of a legal toolkit that they're trying to roll out so that they can fight back against the US sanctions. This couldn't be any more important at this moment when sanctions are being rolled out on almost a daily basis against Russia. And for us, what it really creates is a lot of uncertainty in the business environment because a lot of these tools have yet to be applied, particularly to foreign companies operating in China. And so there's 3 main tools. There's the anti-foreign sanctions law. There's, I'm going to forget all the tools right now, the anti-foreign sanctions law, the unreliable entity list, and then the long-arm jurisdiction law, I believe, or something like that. I'm blanking on the third one. China probably knows it. But what those laws allow the Chinese government to do is basically say, if you're going to abide by US sanctions, well, we're going to hit you back with our anti-sanctions. And we're just waiting for the moment where some foreign company, US company or otherwise, gets stuck in the middle of this sanctions, anti-sanctions regime and is basically put in a place where it's breaking either Chinese or US law. So I think, and with the proliferation of sanctions generally from the US towards China, but now on the wake of what's happening in Russia, it seems inevitable to us. And we think companies absolutely need to be thinking in advance about what kind of measures we're going to take if we come anywhere near being the company that is, gets caught in that quagmire.
Thanks. perhaps I guess it's just a natural flow into some more focused discussion on the Ukraine issue, just because we're talking about the sanctions and the anti-foreign sanctions regulatory developments. You know, a lot of media have been talking about how China might offer Russia an out in terms of, you know, help China blunt the impact of some of these economic sanctions and export controls. But is this really in China's interests? I mean, as you were saying, Chinese companies are especially tech companies, are already suffering from a lot of U.S. tech export controls and restrictions. And with the expansion of the Western sanctions on Russia, potentially, you know, expansion of the foreign direct product rule that has been imposed on a lot of Chinese tech companies. Do Chinese tech companies want to get caught up in this? It could impact, you know, China's access to the critical technologies that are core to China's new development strategy. And you know, we've seen some Chinese banks already step up and put restrictions on financial flows to Russian entities. So, I mean, Deborah, do you want to take a stab at this first? Is this in China's interest? How do you expect China to kind of respond?
Well, I'd start first with, for any company that's looking at doing business in China or Chinese companies looking at doing business outside, regulatory risk right now is probably the most significant risk. And whether it's the US government, who is going to be tracking very carefully what China is doing, the reason that the Chinese banks had to limit the flows is because of US sanctions, and they didn't want to be in violation of them. Certainly, when it looks to providing things like semiconductors from SMIC, US sanctions, because there's US product that have gone into those semiconductors, China has to go through the US in order to sell those to Russia and not be in violation of sanctions. And so there are going to be issues, and they may very well come into this kind of situation that Andrew was talking about, where they're caught between the two countries in terms of how they act. Looking at what's in China's interest, sometimes we look at it in the context of what's in our interest and how we would react in the context of China. And what Xi Jinping is clearly trying to do is have a balance. It's no surprise, right, that before the Olympics, when Putin was in China at the opening ceremonies, China and Russia signed long-term agreements on wheat and oil. And whether Xi Jinping knew or not, that was certainly an indication that some kind of action was going to be taking place. China has been notorious, and Chinese companies have been notorious in going around sanctions for North Korea. We've seen it in the financial sector. We've seen it in some of the items that have been able to be transshipped through. Will it happen in the case of Russia? It's going to be determined probably how long this conflict lasts with Ukraine, how much heat is put on Russia by the rest of the world, and where China decides it wants to play in this whole debate. And I'm sure there are a lot of decisions and discussions going on in Zhongnanhai right now about what steps they should be taking. I'd like to go back to something too, though, that Andrew was talking about in terms of these regulatory issues in Chinese tech companies. And one of the things that we found in some research done by the Paulson Institute is we can start to see some of the patterns that are emerging around risk. And if you take technology, the technology sector, in a review of the top 500 companies in Horan's list of top firms, you can divide them into software companies and hardware companies, essentially. About 95% of the action that was taken by the Chinese government was at software companies, not hardware. Within those software companies, again, around 90% was for platform companies, for those that had data that they were getting basically scrubbing, and China has now changed the rules around the ability to collect personal data, but also the monopolistic power of those platform companies, where they're now forcing them to be interoperable. Why are they taking some of these steps? When you have a country where, say, 90% of industry are small and medium-sized enterprises, and they're accounting for 60% of the growth, the big guys, the Alibabas, the Tencents, who are controlling these sectors with their monopolistic behavior, have to have some regulatory structure around them to allow these SMEs to thrive.
China, can I just layer off on that? Yeah, I think that's an incredibly important point, and something to maybe tie it back a little bit is, so we have noticed a discernible shift in how regulators even talk about the platform companies. To bolster your point there, or to support your point, Deborah, now when they talk about these companies, they either refer to them as explicitly platform companies or data companies. They basically refuse to call them tech companies. And the implication there is that these companies are no longer really innovating, right? That the innovators are the hard tech companies, just as you said, Huawei, ZTE, others, who have seen virtually no negative ramifications from the crackdown. And so policymakers, and that in a way parallels what's happening in the US with, talk around how should platform companies, internet companies be regulated. So it's, not unique to China in any way. But the reason that we find that interesting is because it really is a fundamental re-rendering of the relationship between those companies and the state, right? And so the state's basically saying, listen, you have all this data, which, by the way, we as the state believe we are the rightful owners of. You're making all this money off of it. So you guys are going to have to play ball with our national development goals. And so when we talk to companies or investors or whomever who say, well, when's this tech crackdown going to change or going to kind of run its course, whatever, it's not. And partly that is because of the changing fundamental priorities of governance and of the party's kind of role in the economy that we started to talk about at the beginning. So I just wanted to say, very much support your thinking there from kind of a different angle. And we just really see this, your point about data, we think that's the biggest, most enduring long-term aspect of this whole thing, where Xi Jinping is basically saying, like data governance, they just made data one of the additional factors of production, right? Alongside land, labor, capital, et cetera. That's a huge statement to say that this is a critical economic input that we have to get right. And so, and the party is now, and the state is now laying out this new data governance regime. And they think that is going to be huge to, winning the 21st century. And it's going to impact every single company, foreign and domestic, that's operating in China.
It seems like you're both in alignment that despite what many, foreign observers have seen as significant regulatory uncertainty around some of last year's ed tech technology crackdowns, there actually might be more regulatory predictability in what the Chinese government is doing based on this new development paradigm and some of these goals around technology and data.
Well, I think one of the reasons I've talked about Xi 3.0 is I do think that it's going to be a new atmosphere for businesses in China, for foreign businesses in China. One, the kinds of actions that they're taking around the regulatory structure are unclear, and I would argue probably implemented in a very ham-handed and heavy-fisted way. No question, as we see the crackdown on Didi and others. But will they move towards a clearer, more enforced regulatory structure? I think so. And in many ways, Western companies do better in that atmosphere. It used to be not all that long ago, when I was actually in the US government, you couldn't actually obtain Chinese laws and regulations on trade as a foreigner. They were classified. And so China has come a long way in creating a regulatory structure. Is it geared towards protection of the domestic industry? Of course. It's not to say that a lot of countries are, but our companies in the West do much better when the regulations are clear, when they understand what they are, and when they're enforced. And in China, particularly in the tech sector, it really has been the Wild West.
Let me just take a moment to remind the audience that if you have any questions, please drop them in the Q&A box and we'll get to them. I have plenty of questions for Andrew and Deborah, but we would also welcome your input. Maybe, staying on this idea of technology, Andrew, you and Trivium have done a lot of great work on dual circulation and technology and how there's, some goals that achieve for technological self-sufficiency and reducing choke points and things like that. Can you talk a little bit about what are some of China's focus areas and sectors that China's focusing on developing this self-sufficiency in technology? Does it mean that how is it changing the space for foreign tech companies to operate in China's environment? And how do you see this going forward?
Yeah, well, I mean, the tech environment, tech sector generally, and the platform economy generally is going to increasingly be difficult for foreign companies to play. There's just going to be, I mean, we have to recognize that, right? There are going to be different sectors of the economy where foreign companies continue to be very welcome, and where the regulation, as Deborah says, does become much more transparent and predictable, and life is easier for some companies. Those companies are not tech companies. You can just ask Qualcomm and Cisco and Facebook, kind of along the chain, some companies who've never been allowed, and other companies who are just having increasingly hard time operating there. And so I think that's a reality that we're going to have to understand. And I think, in a way, you think about the whole economic decoupling conversation in the United States, that's something that is in line with the priorities and interests of a lot of US policymakers. So I think China's kind of like, yeah, well, we're okay for decoupling in some way. They would rather do it more slowly, right? That's their issue with the decoupling conversation, especially in the tech sphere, is not that they don't want to decouple, they just wanted more time to become self-sufficient, as you say. I think, the biggest area of focus is obviously the hard kind of fundamental tech, with chips being the most important aspect, right? I mean, that's where all the money's going. That's where, both the government and the private sector is investing most heavily. There's obvious supply chain issues there. We look at, forget about decoupling, you look at what's happening in the auto sector. There's just Chinese regulators and policymakers are looking at, sector by sector, piece by piece of the technology supply chain, and saying we have tons of vulnerabilities here. And dual circulation is all about kind of identifying areas where the economy has linkages with the global economy, and those linkages create vulnerabilities, and trying to stamp out the vulnerabilities, while also finding places where the Chinese economy links up with the global economy, and that provides advantages to China. And that would be areas like financial integration, where within the dual circulation strategy, China wants to double down on those benefits that it's getting from linkages to the global economy. So I see it as sort of a taking stock, sector by sector, issue by issue, of how China interacts with the global economy, and saying, let's double down on the benefits, and let's try to close off the choke points or the vulnerabilities. And obviously that starts, with chips. I think everyone knows that. So it's not, I'm not blowing anyone's mind by saying that, but that's just where we see a ton of the action right now.
I agree with everything Andrew said, but I would have a slightly different angle on it as well, though. China, as they look at where their economic growth is going to come from, they very much are trying to stimulate consumption. And that was one of the drags on the economy last year. Unlike in the West, we didn't see this rush to buy goods. We saw an increase in savings, and there wasn't this rush on e-commerce and purchases. One of the concerns about reopening again in this post-COVID world, and I know this is going to be a big debate for China on the timing of when it is, and for those of us in the China community to bet on when it happens, but it's certainly not going to happen in any major way before the end of the year. That what happens with consumption, and part of dual circulation is this opportunity to promote consumption, and that does provide opportunity for foreign firms. I completely agree with Andrew that it's not going to be in areas where China considers it's a fundamental part of its infrastructure or national security, but there are going to be increased opportunities in those areas. At the same time, I think what a lot of people don't focus on is the fact that it also means that China is going to be promoting its own companies overseas. And we are really going to see an increase in competition in traditional spheres of American influence. We're already seeing it in Latin America. We're already seeing it in the Middle East. And it's not just the state-owned enterprises, it's support for the private sector companies who are going in and starting to dominate. And so it should be no surprise, for example, linking this back to what's happening with Ukraine, that in the national security and the United Nations, the UAE has been abstaining from the votes against Russia. And China is their largest trading partner now. In fact, even China is the largest trading partner of Ukraine. So these dynamics of these Chinese companies going in and China using its own economic might are really starting to change what some of the global flows and global competition will be. And I think as American policymakers, they really need to be focusing on those future trends.
Thanks. One other aspect of dual circulation that Andrew, you mentioned was the foreign financial investment into China. And Deborah, this is something that you were also just touching on. And Chinese policymakers recognize that they must keep their markets open to foreign investment. That is critical to the success of their new trajectory. And they're attracting capital coming back into China, while also, maintaining some outbound capital controls that have been longstanding in China's policy. Recently, we've been seeing some, regulators in both markets have imposed new policies that might make it harder for Chinese companies to list overseas. And a question from the audience is asking about, what about the future of Chinese stock market listings, and how does that long-term strategy play into this new development paradigm, as well as in Hong Kong? How do we see this playing out? It seems like there might be a conflict there, but there might also be some opportunities. Open for either one of you.
I know, I'm happy. I think Ant Financial's proposed IPO in Hong Kong, I think really was a turning point. And even though it didn't go forward, the fact that the Chinese were going to be able to raise as much capital in Hong Kong as they could have raised in New York was a really eye-opening moment. And the difficulties around Chinese companies listing on stock markets in the US come both from the US policymakers as well as from Chinese policymakers. The Chinese are starting to review and reconsider the ability of Chinese companies to list overseas, particularly ones that have data that's considered sensitive, and they're making it much more complicated for them to list overseas. At the same time, clearly we know, for those who follow closely, that the US government is requiring additional review on accounting standards for already listed companies, and will have new requirements for those listing related to access to their records in China. But they're putting other restrictions on them, including through these VIEs, which have been traditionally a way that Chinese companies got around the rules in China to list on US markets. And so we see the pressure on both sides. Hong Kong is going to be the beneficiary of that. How big and how long that can last remains to be seen, and whether that will start to transfer up the coast to Shanghai and Shenzhen, I think also will be another issue. But for the near term, certainly, I think Hong Kong is going to be the big beneficiary of these tensions that are going on from both countries over IPOs from China.
Andrew, did you have anything you wanted to add on that?
No, I couldn't agree more. I think Hong Kong's the initial beneficiary, but you made the point about Ant. Certainly, Ant could raise the same amount of capital in Hong Kong as it could in New York, but that's not necessarily true for all companies, meaning Hong Kong's capital markets aren't quite as deep or anywhere near as deep really as New York. So I think there are going to be other beneficiaries, as you say. Maybe it's Singapore, maybe it's the new connect with, or it's the London Connect's not new, but newly expanded to Germany and Switzerland. And also, as you say, the mainland markets. And if you just look at what the major financial institutions, US and otherwise, are doing right now, they're all going, as I know you guys know well, to get brokerage licenses in mainland China, because they see that as where the action is, right? They may be sad to miss out on some IPOs in New York, but if they can just underwrite those IPOs on the mainland, they're totally fine with it. I think that's where the major Western financial institutions see the future, and you see it through their actions now. I think the one big thing that the takeaway for all companies there is, the question is, does that movement into China, create regulatory risk back home? And that's obviously something we're seeing, for a bunch of Western companies operating in China. You're not just operating in China anymore. What you do in China has kind of global ramifications with global regulators. So I totally agree. That's where the movement is. And I think it's going to lead to, some more regulatory conflicts that companies are going to have to deal with.
Foreign companies are definitely increasingly finding themselves between a rock and a hard place in China. I mean, China remains a very critical market for companies across industries, but like you were just saying, they have to balance different regulatory and political issues and competing demands in US, EU, Chinese governments, as well as the consumers, talking about, some of the recent boycotts. How should companies deal with this? Toughie. Deborah.
We need experienced guides.
I was going to say, that's a tough one. I'll wait you out, Deborah.
But certainly, obviously, how for many of the companies who are doing businesses, it's not going to be an issue. If you're in sectors that are consumer products and those kinds of things, chances are very slim. You're not going to get caught in the middle of it unless it's an issue that comes along like we've seen around Xinjiang cotton, or there's a false step that's taken in one of the two countries' markets. But by and large, those companies should be okay. It's the ones that are considered contributing to the other country's strength, whether they're in technology. In some cases, increasingly, there's talk of reviewing investments in China, outbound investments in the same context as the CFIUS reviewing inbound investment, and some of those other areas where you have to track and look ahead at where the policy trends are going in both countries to make sure that you're not falling afoul of those regulations.
Yeah, I just follow by saying that whether you're in a sector that's going to be relatively okay, or you're in a very strategic sector, I mean, in extreme circumstances, for some companies, it's going to be very, very difficult to do business in China. But for the by and large, the majority of companies, the move isn't to take your ball and go home. The move is to figure out companies been doing this forever, figure out how to react to an evolving regulatory environment, both in China and the US and elsewhere and globally. And, just one of the most practical things that we've seen companies doing is, for years, companies had a China PR strategy, a China government affairs strategy, a China public affairs strategy, a Europe strategy, a US strategy. That no longer holds. You have to have an integrated global strategy, because what you do in one market, gives you blowback or creates challenges or issues or opportunities potentially in another. And we work with a lot of government affairs professionals in China, as I know you all do as well. And, those teams have just gotten more and more integrated. It's required a lot more communication. And one of the challenges that we've seen is for, just at a kind of human level, Chinese government affairs professionals who are, typically Chinese citizens, often former government officials, finding the right way to kind of tell the China story internally to their executive stakeholders. So these are the kinds of things that companies on a very practical level are trying to think through to make sure they can continue to navigate these waters. They're going to be choppy, but that's just kind of, it's 2022. We've seen 3 years of choppy waters. So I think, companies just have to forge on. I think those are some of the practical things that they're doing to try to react to the new environment.
Certainly not made any easier by the COVID restrictions and travel to China. We're getting close to time, but I have two more very important questions, or very interesting questions I think that we should get to from the audience. We were talking a bit about this, taking a step back, about the role of innovative SMEs in the new phase in China. Xi Jinping has been out there bolstering the new Beijing stock market that's going to be encouraging an investment in SMEs, innovative SMEs to go public. How do you see their internationalization process in Latin Africa and Europe? Deborah, you were talking about growing competition from Chinese companies in third markets. And we have one more question about Ukraine, but I'll let us first answer this one.
Well, that's where I see the real growth is. It's first, as I was saying earlier, SMEs are 60% of the growth and overwhelmingly the source of job creation in China. And naturally, they're going to expand outside of the Chinese market. Many of their technologies are very compatible in Latin America and in other emerging markets. And so that's why we've seen that kind of progress going in. And the interesting thing, we had an event with the Chinese ambassador a few years ago who said very naturally, as we see an increased Chinese presence or investment in these countries, China's foreign policy interest will follow that. And that's what we're starting to see. We see it, as I mentioned, in the UAE. We are going to see it across Egypt. We're seeing it across Latin America. And we've certainly seen it in Africa and with the establishment of the first overseas military base. So it's not just about the growth of the Chinese companies, and certainly the SMEs will be there, but we're going to see all kinds of consequences follow from China's continued growth economically and the use of their economic power as a tool of diplomacy.
Thanks. And I know that we're almost at time, but this is a good question. Andrew, I know that Trivium has put out a great quick take on this. Do you think Russia's actions in Ukraine may embolden China to act militarily in Taiwan? Deborah, I know you'll have thoughts too, but
so no, I don't. Our fairly strong view would be that China's interests vis-a-vis Taiwan have not changed in light of what's happening with Russia and Ukraine. And I know it's we've seen a lot written about that. We have a lot of client incomings about that, and it seems like a logical step to say, oh well, if the West doesn't respond strongly enough to Russia, then they're basically giving China a green light to go into Taiwan. Taiwan and Ukraine are totally different situations, totally different sets of interests, totally different levels of difficulty, frankly, in terms of military incursions. So in our view, it doesn't change Xi Jinping's calculus towards Taiwan basically at all, because it doesn't change China's capabilities. Also, if anything, the strong Western response may be having China think twice, right? And I think, the pretty clear outcome, at least so far, of the Russia invasion is everything that Vladimir Putin didn't want, right? It looks pretty weak militarily, an emboldened NATO in lockstep, working against him, financial hardship through the sanctions. And not to harp on sanctions completely, but the one thing that I think China is very, very closely watching is the sanctions regime. Because not only have sanctions increasingly been applied to China, bar Taiwan, around Hong Kong and Xinjiang and other areas, but if eventually, a decade from now, China does feel like it's ready to go in and invade Taiwan militarily, it's going to be looking at how leaders are going to be looking at how this sanctions regime played out, how it impacted Russia, if and how Russia was able to get around it, if at all, with China's help or not China's help. So I think the sanctions rollout is probably the thing that is like being most closely watched by Chinese leaders in terms of their Taiwan calculus. But fundamentally, my point of view would be that it doesn't change their level of comfort in terms of trying to actually move on Taiwan in the short term.
We're at time, but Deborah, did you want to add anything?
Just to add, I agree 100%.
Thank you both so much. This has been a great conversation, all too quick, and so many other topics to cover, but luckily we'll have plenty more of these discussions going forward. Andrew, thank you for participating today. We look forward to collaborating with Trivium, and thank you to the audience for sticking with us for the full 45 minutes.
Great, thanks, China. Thanks, Andrew.
Thanks, everybody. Appreciate it.